Okay, what's your question?
Yeah, this is my question. For that week low, when we want to sell, like the trend has been coming down already. For that week low, are you with me? So
Mm-hmm.
for that week low, yeah, for us to have a breakup structure for that week low, must you also take two structural um must you also take two structural points,
No,
like two structural internal decay?
no, it doesn't have to.
Doesn't have to. Okay, one is enough.
One is enough.
Okay. Oh,
Yes.
that's my first question. Second question is this:
Uh-huh.
in getting the range circle,
Mm.
which time frame do you think will be more preferable? Because my challenge is this:
Mm-hmm.
a trend on 30 minutes, time frame
Mm-hmm.
might not really be a trend on 4 hours.
Mm.
So me that those are the little challenges I used to have. So what time frame is best to look for that sweep of liquidity and break of structure for you
Mm.
to know that okay, the range cycle is about to start. So then all you'll be looking for through is to know when you enter again for the main trend to continue. So what time frame will you really suggest for a person to look for the range cycle? Like when you want to look for the range cycle, what time frame is best for you for it? Those are my two questions.
Okay, beautiful. So you can use when it comes to um like I always say, you can always use the weekly, right? To make it very easy, you can use the daily and you can use the 4 hours, right? These 4 hours is an exception, but you can use the daily one, the weekly, and sometimes the 4 hours. Just say you can use let's use the weekly. Let's say we are using weekly and the daily to build bias. But when it comes to be able, if you build your bias, bias or what I choose to call a storyline, if you build it from the weekly and to the daily, we can also go back to about 4 hours. You can see a range circle on 4 hours. You can see it on 1 hour. You can see it on 2 hours. You can also see it on 30 minutes, right? You can even see it on 15 minutes. It's just being able to be able to train your eyes to be able to see it. You will see range circle on 15 minutes. You see it on 30. You see it on 45. You see it on 1 hour. You will even see it on 2 hours, right? There are times that you also see it on the 4 hours as well, right? So if you build a bias on the daily time frame and you believe that, let's say for example, let's say price has started reacting from a particular daily key level, right? And now the price has started reacting from a particular daily key level. Okay, this is the daily time frame. We know already that this is already a bearish market structure already, right? Because you can see what price is actually doing here. We swept liquidity here. And after the sweep of liquidity, you can see how we broke this particular structure, right? So after breaking the particular structure, what did you notice that price did, right? Did you notice how price started to give to us this lower low, give to us this lower high, give to us, let's pick this as a lower low, give to us this lower high, give to us this lower low, right? Give to us a lower high, give to us a lower low. All right, this is the daily. Then it broke, and after breaking, it gave to us higher high. We'll pick this price came to take out this internal range liquidity. Yeah, give to us this, give to us this, give to us this, right? And now looks like we want to start, maybe we want to start selling also. So you can see the complete range circle on the daily time frame, right? So you can see this is one internal range liquidity that got swept, right? This is another internal range liquidity as well. That the moment price, can you notice what price did? This is the last internal range liquidity that is closest to this strong high.
Yes.
This one swept liquidity and broke structure. Can we use this? Okay, let's just use this one because this one is the most visible. So you can see the moment we took out this last liquidity that is closest to this particular high, right? This strong high, you can see how we started to drop to the downside. And if you move to the line chart, you will see how this one is already giving to us and like an order flow, like price wants to go to the downside. So let's say, for example, price wants to continue to move to the downside again. What can you see here? Right, price has given to us another external range liquidity that needs to go. We have this number one. We also have this number two, right? Then we now have this one, like the major one. Like we have this one number three. So what we can maybe see on GU is that price might come. You can see this is the key level on the daily that got respected and disrespected, right? So price might just come back to that same key level, give to us a sell here, give to us all of these sales until this particular low is taken. We don't know yet. but this place would look at a beautiful place to start to look for selling opportunities from, right? So you can see the entire range circle. This is what I'm trying to show. This is even on the daily, right? There are other examples. Let me see. Somebody's asked a question. Okay, somebody, okay, Dixon said he shared it on the question and answer group. Let me open it. Uh, question and answer. Exactly. Even before he even played out, Dixon shared it already before he played out. So let me open it for us so that each and every one of us can see it. Uh, where is it? Where is it? Where is it? Where is it? Mhm. So this same GU, right? Can see the same. Can we see the screen? I believe we can.
Yes.
So look at it. Dixon shared it already. You can see how we marked it up. I mean, this is a sweet complete reference circle. Funny enough, I've not even seen this before, or maybe I have, but I think this didn't come to mind. So you can see strong high created because we swept liquidity, then we broke. You can see this is the structural points we broke. We broke this one as well. So now we now have price creating for us lower low, lower high, lower low, lower high, lower low, lower high, lower low. In fact, exactly the way I marked it, that is the same way Dixon marked it, exactly the same way, right? So you can see what is happening here. All of these highs are gone. So we can see he was expecting price to play out from this key level after we have taken out this internal range liquidity. We want to take this out and you see price continues to go to the downside. The same thing without even I mean it sent this May 24, right? I've even forgotten I said something like that, but you can see, did you notice how we marked the same thing? You can notice how we marked the same thing, right? So this is a daily example. This is a daily example on what we call the range circle, right? So this is a daily example. So let me take this off. Uh So even if I want to look for selling opportunities, right, I can look for selling opportunities from this particular daily key level because it was tested once, then it was broken, right? So we want to see something like the next daily candle is going to create for us what we call inducement liquidity very close to that same key level, right? We want to see price take out the previous daily high, react from this particular place as straight up. We want to go straight to these lows. All right, you can see all of these lows here that is resting close to this key level. We also have this imbalance that needs to be rebalanced, right? We can begin to have something like this, right? We can begin to have something like this and catch that sale like this. In fact, I think we have news tomorrow. So this might be what news want to play out tomorrow. Tap out in this key level here and just push price to the downside. So now this is even just on the daily time frame. If you go to maybe other time frames like 2 hours, if you go to the 2 hours, if you go to the 1 hour, you would see a whole lot. There are lots and lots of examples, right? There are lots of examples. I mean, let's look for one. I think this is one. Oh, that was too close. We've gotten to January now. So, but we can also see this, right? You can see this. Yeah. So look at this. This is one, right? So you can see where did we sweep the liquidity from, right? You can see where we swept this liquidity from here, right? We swept this liquidity here, right? After sweep of liquidity, the next thing you can see, move to the line chart, you can see how we broke above two structural points, right? After breaking above two structural points, what did you notice we have here, right? So now you can see we have like an inducement, internal range liquidity that needs to go, this internal range liquidity that needs to go. And remember our one-time setup, our lifetime setup, right? uh One lifetime setup that's now we love so much. We have a key level that is overlapping inside of an imbalance. Did you notice that this type of trade played out in June, right? Earlier June, something like that. So if we take this out, mm, hold on, I want to take this out. So one of the things you can actually notice is, so if you come to the left, right, if you look to what is happening here, you can see the range circle already. We had a strong low. This was a strong low that was created because overall the structure was bearish, lower low. We had a lower high, we had a lower low, we had a lower high. We broke above two structural points, created a lower low, higher low, higher high, higher low. You can see all of this, right? So the order flow from here is actually to the upside, right? Order flow from here, you can see price took it off, and the next thing that we want to see price take out is this low. So all of these lows that are being created, they are internal range liquidities, right? So you can see price will come back. This is a complete range cycle. We want to see price do this, take this out, then take out this particular high. So one of the things you want to also notice is that as price was giving to us an order flow to the upside, did you notice how price was also giving to us this order flow to the downside like this, right? So look at this lower high. Let's pick it from here. There are lots of examples that we can actually even see from here. So I mean, there are solid examples. So if you look at what we did here, just by using advanced market structure, right? So we know that we want to come back to this particular low. We want to take out this particular low. So what did you notice here? Advanced market structure, right? So you can see we swept this particular high, or let's use this one. We had this particular liquidity sweep that happened here. And after we had this particular liquidity sweep that happened here, you can see the order flow to the downside. Range circle confirmed, right? We had this lower low, lower high, lower low. Now let's move to the line chart to see if we actually broke structure. Can you see how we broke structure here? Sweep and break. So the range has been defined, right? Range has been defined by what? Sweep and break through the line chart. So now that we have our range being defined, sweep and break, we had our order flow to the downside, lower low, lower high, lower low, right? So the next thing you can actually see is that we have this induced internal range liquidity that needs to go. So what is resting close to the internal range liquidity? Which of the key level? We have this particular key level, open close, that is also resting there. So let's say we want to short from here. So you can see, don't forget we are coming to the downside, right? So we're going to do 10 pips. 10 pips, right? 1 to 3 as usual, but we are going for external range liquidity, right? So because we are going for external range liquidity, so let's play price. Let's see what price does, right? So you can see we are going for external range liquidity taken already, right? External range liquidity has been taken. Somebody left a question. I'm not getting the open close. No. There's nothing like open close liquidity. When we get to key levels, you understand it, right? When we get to key levels, you understand what we're talking about, right? Just hold on. Right. Yes. Somebody said there is a key level very close to it. Yes, there's a key level close to it, right? We had this. This is an open close here, right? This is also an open close. If you play this one, we are still good. If you play this one, we are still good. But if you see this particular one, right? If you see this particular open close on the 2 hours, on the 1 hour time frame, it was an A-shaped key level, right? This other block here was responsible for all of this move, right? This impulsive move to the downside. That is why. So you can see that was why we used it. So anyone you choose to use is fine, right? But we can use this one because this one on the 2 hours, when we come to the 1 hour time frame, that's other block is what we call the open close for us is an A-shaped key level here, right? So if you move, you can see that it is an A-shaped key level, right? So back to our business, right? So what did you notice here? Order flow was to the downside as we continue to Order flows to the downside as we continue to move. So you can see how we moved from internal range liquidity, right? We moved straight to external range liquidity. But don't forget, we are still even coming even much lower, right? We want to take out this. You can see the entire range circle from here to here, right? This is the last load that needs to go. We're not buying from here. This is the last load that needs to go because it has an imbalance. And we also have an open close key level that is also overlapping inside of that imbalance, right? So another thing you can also see again, I think we can also see we can see this. Yeah, I think that's very clear. So you can see just like that question that our other guy asked, right? So if you look at this now, look at the entire order flow, look at the entire structure, right? You can see we have this lower low, lower high, lower low, right? This is what we have here, right? So let me take this off. I want to take something off. Just hold on. So look at this now. Look at the structure for what we have here, right? You can see this is where the strong high started from. This is the next low. This is the next high, right? This here becomes the next low that was being created, right? So we have this. So we have another advanced market structure. You can see this low, this low was broken here, right? So we know that the order flow is still to the downside because we still have all of these lows to go. We still have some of these lows that needs to go, right? So what are we expecting again? Advanced market structure. We're likely going to see this high go, right? If we see this high go, maybe price might play the QMR key level. This QMR key level here, we don't know, but let's see what price does from there. Right, let's play price. Okay, price did not get there. Price did not get there. Okay, you can see price did not get to this QMR key level, right? So what price did was price came to play this particular key level here. All right, so we had lower low, lower high. Okay, lower low. At first, we're looking at this, but price gave to us another advanced structure, right? It gave to us another structure to play with, to work with, right? You can imagine, you remember what I said, right? That our strong high will move from here, right, to this next point because we swept liquidity here. We also broke structure. So price gave us a new structure to work with, which was this low, this high, this low, right? So look at where price came back to play. Price came back to this particular key level here, right? Price came to play this key level and straight. So we move from internal range liquidity straight to external range liquidity, right? So you can see key level, how key level is just, our range circle is just moving from one point of the circle to another. So you can see, right?
Yeah.
Hold on. So you want to see stop loss eat, 10 pips stop loss eat, right? With the 10 pip stops, that was already gone, right? With the 10 pip stops, that was already gone already, right? But it's maybe 11, 15 pips, right? That would have been it. Gone up, right? Somebody wanted to ask, okay, somebody said, do you prefer using A and V?
Yeah, it's me. Okay.
Hold on. I'm coming. Hold on. So somebody said, do you prefer to using the A and V shape key level over the open close? No, we don't prefer one from the other. We use everything. It is the one that is available to us the most at that point. That is the one we get to use. It is the one that is available to us at the moment, right? That is what we get to use. When we get there, you will understand. We've not gotten to key levels now. Okay, Mr. Olawale, unmute your mic.
Yeah. Mr. Fortman, thank you. From this explanation now,
No.
for my own summation, I think it's safe to say, or it's fine to say, you can get the range circle can be on almost all the time frame, especially the higher one. Maybe
Yeah.
let's say to like 2 hours. From this explanation, that's what I'm saying. Because I just checked this time frame we are now, and I can see we are on 2 hours time frame. Yeah, I think we're on 2 hours time frame, and even on this time frame within the first range circle, you could also see another one within it. So I think all it takes is for a person to just understand the range circle. You can see a sweep of liquidity, a break of structure, an inducement, then you're able to just follow that trend. It's fine to have that summation. Okay, that's fine. That's first one. Second one is for my own observation too. I think when you have a key level, when you have a key level when you have a key level and you have two key levels that Oga Fortman, can you hear me, sir?
Okay, yes, I can.
Hello?
Yes, I can.
Yeah, I had a call. I said when you have a key level that has an imbalance above it, But within that imbalance, there's another key level within it. I think in most cases, the one that is above that has an imbalance usually hold than the first one you have. Don't know if you get my question.
Yes, I get.
So
Yes.
there are sometimes when you have a key level above an inducement.
Okay. I think his network is breaking.
My network is breaking. Can you hear me now? Is a call. A call is entering my phone. That's why.
Okay. Okay.
That's why it's. Ooh, no. It's not that it's breaking. So I think you get my point, Sha. That's my question. I think it's fine to say the one with an imbalance we
Mm.
hold more better than the one that does not. I think
Yeah.
that's just not to take our
Yes.
time.
Yes. When we
Yeah.
get to the point where I think Dixon even trades more of that setup a lot. I made mention of it in the welcome address that I said something that there's a setup that if I was to trade one setup for life, all right,
Yeah,
setup I
that's
mean
true.
that is the setup you're already making mention of, the one that has where you have
Mm,
an imbalance and a key level is overlapping with it, right? And
mm,
you can spot it already. Let me show you what I'm talking about, right? So if you go back to our advanced market structure class, right, when we started the first time we kicked off, right, I remember that EU trade that we all took, myself, Mr. Daniel, almost everybody. um let me it was okay, beautiful, this was it. So let me show us. Let's take this out. So if you look at this EU trade we all took, right? So you can see, when we're talking about the advanced market structure, I think we yes, just follow our time frame. So what if we have different, yes, just follow our time frame. So you can see the entire move, right? Structurally, we could see that, okay, fine, we're bullish, because we took out this particular high, right? After we took out this high, you see how we closed above it. And so that day, we're talking about if there's one setup I want to trade for life, is this one that has an inducement liquidity, and also when price has an imbalance, then it has a key level that is actually overlapping it. So you can see this is an A-shaped key level that is overlapping inside of this particular imbalance, right? That day, when we're having that first call, right? Every one of us could remember that price was here. But before we ended the call, price got activated, right? And straight up, right? The first place we want to always target is this our external range liquidity, right? So you can see our price targeted the external range liquidity. At the moment this one delivered, the next day as well, what did you notice that price did? You can remember, remember now. So everybody knows already that, see, we have already swept. You can see this one as well. You can see where price came back to react from. We have an imbalance. If you investigate what we have inside of this, there's a key level inside somewhere around here. If you just investigate all of this, all together, right? So we know that we swept liquidity here, right? We also broke structure, which means that our strong low will move from this place to this particular place, right? So becomes our new strong low. Why? We swept liquidity here. We have also broken above this particular structure. So now you can remember the second trade we took for the next day after this first one gone. After this first one was gone from here, hit this high. So the next thing we can also see again is, right, defined ranges again, right? You can see defined ranges again and again and again and again, right? So you can see this becomes our B leg, which is our inducement or internal range liquidity. And then this becomes our V-shaped key level, right? This is our V-shaped key level. You can see our V-shaped key level here, right? In fact, EU, I think almost everybody caught it. So we are moving again 1 to 3 from internal to external liquidity, right? Can you see what happened here? Are you seeing from year to year, right? You can see all that happened, right? You can see how all of that happened, right? You see, right? So you can see just understanding defined ranges, range circle, play your 1 to 3, you don't have an issue. Uh, Why didn't I play now? So you can see. So what did price do? We moved from internal range liquidity here, played a key level, and we went straight to external range liquidity, right? The moment we took out external range liquidity, you can see how we started to drop. Where did we drop from? This is an open close key level that is also overlapping inside of this imbalance that is resting here. Do you see that? Right? You can see how we tapped from it and what happened next afterwards. Did he come back? You can see it didn't come back, right? Price engulfed here, which is what we talk about when we begin to talk about confirmation entry. So you can see how we had two major buys here from internal to external TP hit, from another internal to external TP hit. So where we are coming from again, right? Open close that is also overlapping with an imbalance. Price tapped into it, gave to us a confirmation entry here. Let's see how price went. Preparing for news. I think it was preparing for news at this time. Boom. Are you seeing? Are you seeing that? Remember, we had a confirmation entry here that got disrespected, right? So let's take this out. But what did you notice that happened here? The same level, right? You can see that is why a key level that is also overlapping inside of an imbalance. And when we get to that setup, I mean, we'll talk about the entire logic behind it. We'll talk about it in
Yeah,
depth.
Mr. Fortman, sorry, sir.
Go ahead.
Sorry, sir. This the only challenge I had with this show on Tuesday, I marked it. I think this was on NFP day.
Yes.
The only challenge I have with it, because now before I could take any trade, I want to know the trend. On this day, before this particular day, our thought, I think I took some loss too when I was trying to get the buy. Our thought or process was the trend is a buy trend on this day. You get? So all I was looking for was a continuation of a buy and not a sell. But as market we have it, as I saw all these things happen here, and it's well understood. But my own point was that it was a buy. It was a buy trend, and this just happened and boom. The rest is history. The market will not give you that. The way you normally say it, the market is not picture perfect. Maybe that's where we will just end it at the end of the day. Which is well.
Okay, just hold on. It doesn't just, things doesn't just happen, right? If NFT was going to do whatever it was going to do, right, things doesn't just happen. I want you to look at the daily time frame. This was NFP day. Remember, we bought from that Thursday to that Friday that gave to us a complete buy. If you go back to our teaching of yesterday talking about liquidity, what can you spot here? You saw how we took out this particular liquidity here. One. Then number two, by now, some of you should be understanding when we talk about, even if we've not spoken about it, we engulfed, right? The moment we're engulfed, I said it to us that there are times that previous daily highs can be used as what? As inducement liquidity or internal range liquidity. So if you move to the line chart, so you can see what Thursday and Friday actually did was to prepare for NFP. What Thursday did and Friday morning was actually to prepare for NFP. Right, so you can see what price did here. Price did, and nothing just happens in price. Although there are times you can take losses and it is after the loss we will now see, oh, this was what happened. But you can see what happened there. We swept liquidity, we engulfed. Thursday traded above this, close to this key level, but it didn't take it out, which means that Thursday is likely going to stand as our inducement or internal range liquidity. So we want to see NFP. London is going to trade close to it and just continue to drop to the downside, right? So that was what happened. So that's why higher time frame is very, very important, right? Higher time frame is very important. So look at what NFP did. NFP traded above, and the moment it traded above, look at this. What did we do? We took out the previous daily high, tapped into a daily key level, A-shaped key level after we engulfed, and we swept liquidity and we engulfed, and you can see how we started to drop. So as much as we want to look for buying opportunities that we can see, yes, this guy is bullish here, right? What is happening currently? Right, what is even happening currently even matters a lot. So let me tell you another one. So for example, so what I'm trying to say is it happens on GU a lot as well, and it also happens on EU too. So for example, you have something like this. Let me flatten this thing. So for example, you can have a 4 hours time frame, Let me use so that it will be very clear. So for example, you can have a 4 hours time frame like this, and the structure is going to be bullish like this, right? Then Asian session, Asian session, you just need only 2 4-hour candles to make up the Asian session. So GU gives this type of setup during London, right? Price will create Asian low, price will also create Asian high, right? On the 4 hours time frame. Then price would give towards this particular key level. Then price would have this one as our external range liquidity. There are times that London, this type of setup, London will take out Asian low, tap into a 4 hours key level, and boom, it will just move to the upside, which means that that's for the current 4 hour key level that served as the last candle that makes up the Asian session was used as our internal range liquidity, the same way we have on the daily, right? Where the daily is going to engulf like this. When the daily engulfs with a candle, if you move to a line chart, it becomes an A-shaped key level. Another daily time frame, right, would do like this. We trade close to that key level, but it will not touch it, which means that we have a key level already that has an inducement liquidity. So what do we expect? We want to see previous daily high taken, then we want to see the key level tapped, then we want to see all of these lows go, right? This same thing that I'm showing to you, right? You can see that was what happened. That was, in fact, that was the move for USD CAD last week. Like that was the most explosive move for USD CAD last week. So look at this USD CAD. It's just studies, right? Studies, see, train your eyes to see these things. So what can you see on USD CAD? Can you see the entire move for USD CAD? The same way we had the sales for EU was the same way we had the sales. We had these buys for USD CAD. So what can you see here, right? So let's start with this. Let's take this off. So when we take this off, right, what can you see that happened here, right? You can see on the weekly time frame, we didn't engulf, right? But you can see how the weekly created for us a V-shaped key level. And now, after creating a V-shaped key level, you can see how this current, the previous weekly candle traded close to it, but it did not take it out, right? It didn't take it out. Now, for the fact that it did not take it out, we expect that this previous weekly low is going to serve as an inducement liquidity, right? So what we want to see price do is that we want to see price take this out, the previous daily low and the previous weekly low, take it out, and all of these highs must go, right? So we want to trade. So you can see our next target are going to be all of this old weekly high, this old weekly high, all of these old weekly highs must go. So now you can see, what is happening here. In fact, this one alone says, this is the type of setup that even most times it forms on the 4 hours. Many times you always see it on the 4 hours. What I mean is that, but only that, people like lower time frames a lot. 4 hours will create a V-shaped key level, right? Or an A-shaped key level like this. 4 hours will create a V-shape or an A-shaped key level. Then the next 4 hour candle is going to trade close to the key level, but it will not tap into it, which means that that next 4 hour candle that was created is going to serve as our inducement liquidity. Price will take it out, tap into it, and continue to move to the downside or to the upside. The same way, 4 hour key level, 4 hour time frame is going to trade close to the 4 hour key level that was created, but it will not tap into it. That 4 hour candle is going to serve as an induced internal range liquidity. Price will take it out and continue to drop, right? So now let's look at what price did on USD CAD that same Friday, right? You can see that the same thing that we had on USD CAD was what we had on EU, right? So look at this. Tapped one. Now, are you seeing it now? Can you see? Can you see the accuracy from the weekly time frame, weekly expansion? All of these have gone already, right? So this next high needs to go. The moment this next high goes, we might see a little bit of retracement, depending on how this USD CAD closes this week, right? If we take out this particular high and it closes below, we might just look for some sales before the buy continues again, because this looks like the next liquidity that price wants to go and take. Do you understand? Let me check this.
Yes.
The only thing I saw after study was ERL taking IRL next on the daily door. Okay. Okay, beautiful. So that's just the way it is, right? So any other question? I was thinking, so I'm going to give an assignment. We have just 3 minutes left. So this is the assignment I'm going to be giving. The assignment I'm going to be giving is that. So the assignment I'm going to be giving is go to your chart and study Mark out charts. Use the assignment subtopic that is being created. Mark out range circles a lot. Mark out a lot. The ones that have played out. Mark out. You can. It doesn't have to be EU and GU or gold. It doesn't have to be the majors. You can do for NZD, USD. You can do for BTC. You can do for Ethereum, crypto, anything. Just mark, send to the chat so that we can also meet maybe later tonight. If people do the assignment, we can do like an assignment review, right? Then do some assignment review, do some chat studies, and then we'll meet again tomorrow. Right? Any other question? Okay, if there's no question, see you when I see you. The recording is going to be dropped tonight. So the recording is going to be dropped now. So I'm encouraging you, right? If you were in the first call when we started sharing the stories of Dixon and myself, please roll your sleeves and let's put in the work. Yes, what are we marking out? Yeah, we're marking out range circles, just what we taught today. Range circles, where price, created, started to define a range, started to create a defined range by sweep and break. Then price came to take out internal to external, from external to internal, and all of those things, right? Just from what we taught today, right? So we can review it. Yes, A-shape sells, V-shape buys. Yes, yes, actually. We are getting there. Don't rush. Don't worry. We are getting there. Right. So see you guys later tonight. Let's have a wonderful evening.